Dave with me, Patrick Munley. Want to update the S&P 500 view using the emini futures contract. Before I get into today's analysis, just a bit of housekeeping. I'm going to be offline from today, and I will be back online on September 4th. Any meaningful position updates, I'll try and keep you posted. But yeah, I'm on pretty much on vacation. So, with that said, let's take a look at the macro for the day. Obviously, I'll speech this afternoon. That's really going to drive things. Heading into next week, the only other key event, well, a couple of key events. Obviously, we're going to get Nvidia earnings on the 28th. And then we'll be heading into the next jobs report, which will also be pretty pivotal, I would imagine, especially if it confirms last month's weaker readings. So, from a technical perspective, yesterday's close flipped the 5-period volume weighted average price bearish for the first time in this move to the upside. So, as I mentioned previously, the pullback I'm anticipating before we get another run at highs is it's going to be roughly about 150, 170 points, which will be equal to what we'll call the wave 2 pullback. So we look for a wave 4 and a 5th wave extension, which could potentially print new highs. And like I said yesterday, that time window of September 9th through to the 16th is going to be pivotal. And the upside objective is a 5888 test. So those are some key levels to keep in mind on the higher time frames. Obviously, intraday things are a little bit more fluid. And so let's look at the charts and see where the opportunities are for the session ahead. Here you can see my current positions, stops, etc. I'm long volatility, long the dollar, short the euro, short the S&P at the moment. I'm still holding the lottery ticket that is Bitcoin. So the weekly plan, we tested the key levels, found resistance yesterday, pulled back. We're now testing or moving into test this 56.30 to 56.40. I'm watching price action here. This could be an area to add to short positions. Reluctant really to put on any meaningful size ahead of Powell, but I did see a note at Bank of America noting that Powell's last 3 Jackson Hole speeches have seen weakness in the markets following the speech. So we'll see how he plays it today. If he maintains the dovish stance and keeps market pricing in this 25 bips move at on the September 18th meeting, then I think we'll pretty much maintain the status quo. Anything a bit more hawkish would likely see markets head for another leg to the downside. Equally, anything overtly dovish, which alerts participants to the potential that the committee have some underlying concerns about the economy, could also see another leg to the downside as investors pay a risk. So just some factors to keep an eye on. I'll probably drop a note into the Facebook chat with a preview of the Powell speech. I did put a Goldman note in earlier, and so to the day's setup for me. Like I say, I'm watching this 56.30, 56.40 area. If we get through there and we close through 56.44, next upside objective is going to be a test of the 56.60 to 56.70. Well, once again, I'd take a look at the short side there, especially if we're trading into that area late in the session. The bull bear zone for now is going to be this 5610, 5600. If we take out 5600, then I'm looking for 5685 and 5675. So you've got some liquidity here on the book map, 5570. So keep an eye on that 5580, 5570 area. That could see that could be a bounce. And again, given the current volatility with the VIX kicking up a little bit here, we are just shy of the 17 handle. So with these tests of these levels at the moment, I've been looking for certainly a 15 to 20 point reaction if they're going to be in play. So keep that in mind in terms of managing your position, i.e., either taking partial profits or moving stocks to break even once you get that type of reaction through the 5670 handle. Then that will be another bearish development, and I'd be looking down to the 5540, 5550, where once again I think you could certainly play for a tradable bounce. But if we start to trade down there, then going back to the daily chart, that's going to confirm this bearish development in terms of the volume weighted average price. On the weekly time frame, we have to close below 54.50s, possible but less probable at this stage, would be my view, I think. But keep that in mind, because that would once again flip the weekly chart bearish, and like I say, we could see this next leg to the downside still have that 5,000 level untapped, which would be an objective to the downside if things do start to roll over. So that wraps things up from me. You won't hear from me now for a week or so. And as always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.